Well, Dave Asman just told you stocks are soaring after 3 days of steep sell-offs. The market has now made a really remarkable spike higher. Remember August, then this dazzling fall. So what's next? I want to immediately bring in our panel, Strategic Wealth Partners CEO Mark Tepper, Landberg Thalman Asset Management CEO Phil Blancato, and Bull Tick Capital Markets Chief Strategist Kathryn Rooney Vera. Phil, first of all, I'm going to ask everyone, but I'll start with you, Phil. Is the worst over?
No, but it's not. We got lots of volatility to come here. The election cycles like this will do that. High valuations will do that. And like an AstraZeneca announcement that put some concern around the vaccine front. So I think we grind higher through the rest of the year, but it's going to take fits and starts to do it.
So are you saying then we retest the low from yesterday, or this sort of volatility is here to stay?
I think the volatility is here to stay, but see, I'm in the camp that I'd like a 10% correction, and I'm going to tell you why. A good brush fire in the market is healthy. You want to wipe out some of the charlatans. You want to get valuations more in line, give you a chance to capitulate and reinvest. So retesting the low, for sure, we're going to do that again, as we saw. I think we're going to go further than that, maybe 5 or even more, especially as we get lumpy news on the vaccine front. But you grind higher because you get closer to the election, data comes in, and things will get more euphoric as we get through the end of the year.
Kathryn Rooney Vera, I think you may say if we do go lower, watch out for the Fed to the rescue.
Yeah, Charles, you know me by now. Look, Phil's right, but I think that the message that I would like to convey to your audience today is that there's a lot of guys I talk to every day, all day long, that have a ton of cash on the sidelines. We saw that cash come roaring into the markets today, and that shouldn't have been a surprise to many people. So when there's a comfortable correction, 3 to 5%, you should expect to see that cash. It's been, in breathless anticipation, waiting for its chance to get in. And if it continues to correct, I think you'll see the heavy hand of the Fed come in. But look, I think for guys that have a ton of cash on the sideline, stick to the plan. You have a structure of your asset allocation. Go in, dollar cost average, little by little, without emotions, without fear, without greed. We have to try to be methodical. But I agree with Phil. Volatility will come and go, but the general trajectory, I think, will be higher.
Mark, your theory is that pullbacks are buyable in uptrends. Well, we've certainly been in an uptrend.
Yeah, no doubt. So we define an uptrend as whenever you have the 50 and the 200-day moving average, when they're positively sloping, you're in a strong uptrend, so pullbacks are buyable. Phil mentioned 10%, okay? And that's important because what's typical after a huge rally off a major low is a 10% pullback. So that would take the S&P to somewhere in that 3,200 to 3,250 range. We're right at around 3,400 now, 5% away from all-time highs. I think you continue to see a little bit of consolidation. Plus, I mean, if you think about it, the market was way overextended. I think it needs to correct a little more. And September is typically a very weak month.
So then let's talk about this rotation theme, right? Because it was big in August. Although, as much as we talked about it, growth never really relinquished the leadership role. But now that these names, these big growth names, shown that they can come down very swiftly, should investors actually seek a more balanced portfolio? And Kathryn, you talked about this barbell approach. I would assume all along you've been talking value and growth. But now that we see that they can come down as fast as they go up, is there a preference on where we lean more toward maybe value yet?
I think that this broadening out is the right method of looking at it, rather than a rotation of broadening out. And I think that's right. So what you want to be doing is, if tech sells off 10%, that's a great opportunity. Get some tech, right? But also have a utilities position, have a gold position, have a tips position. Buy a married put option. So you buy the S&P when it drops 5%. You buy the put option either simultaneously or later in the future date. But you want to have that protection, Charles, I think, because if things go up really fast, they can come down really fast. And a lot of this, Charles, has been retail flows. Guys chasing value when it's already run amok. So you have Microsoft and Apple, retail money flowing in. It can flow out just as quickly.
Mark, I don't think you're in tech, but you do have some names that you're looking at here.
Well, we are in tech, so we're overweight tech, so that's worked very well for us this year.
Dip, right?
We are not buying tech right now. So I bought a few companies this morning. I added to positions. I bought some Penn National Gaming. I bought some Stamps.com. Look, Charles, football's coming back, right? So When it comes to Penn National, it's really a big play on the rapidly growing sports betting and online gaming market. Right now, that's about $2 billion a year. We expect that to 10x over the next 10 years. And you're able to get in on the ground floor. I mean, states are just beginning to legalize sports betting. So,
right.
You know, the biggest catalyst for these guys right now is their Barstool Sportsbook app is rolling out later this month.
Yeah,
and when Penn acquired Barstool, they got a bunch of regular users to come along with it.
They certainly did. The Dave Portnoy effect has not hurt them. Also, by the way, I love Stamps. I'm in it. I'm getting waxed in it, but I think it's the most undervalued stock in the market, so I'm glad I have the company. Hey, Phil, you've also been advocating this barbell approach, but you know, what's interesting is that when the market's coming down like it has in the last few days, like it did in the last few days, everything goes down. So how do you tell someone, hey, this barbell approach is the right way to go when you might miss the big gains in tech on the upside and all of your stocks go down when they all go down?
Because you got to have a belief that we're getting out of this. If we get out of this and you're out of a recession, what's going to win? First off, mid caps. There's an underloved sector of the marketplace. You can look at the mid cap space, load up there, and really win when we get out of recession. Second, value in and of itself is still underperforming growth. So for that reason, I think we're out of the recession, really out of it with a vaccine sometime early next year. And in that case, you're going to win by buying the names that are cheapest. So take some profit and growth. Rotate a bit towards value. You can still have a growth tilt, so you can still catch what you're talking about. I'm not saying exit it, but take some profit. Be a good portfolio manager.
Sure.
Take some gains, rotate, mid-cap, and you'll love it on the other side of the recession. A Whirlpool, by the way, is right in the middle of that.
Well,
I really like.
Say that again?
I like a name like a Whirlpool. Think about what brick-and-mortar company, your point earlier on, I could buy and own for the next 12 months and be happy I did.
I love Whirlpool, been in it for a few years. Also, Sherwin-Williams, the same story, love it, got an upgrade today. Both stocks are soaring like tech stocks. By the way, intriguing news, folks, and I want to get your opinion on it this morning. Found out Warren Buffett taking a gargantuan stake in a cloud company called Snowflake. When this company IPOs, I mean, it's something Warren Buffett hardly ever does. Mark, I mean, does this sort of add credibility? It's already obviously a hot industry, but when you get a Warren Buffett jumping in there, should everyone have exposure to the cloud space?
Yeah, I mean, it's about time Berkshire is actually getting into the cloud. I mean, you know, that's where the future's headed. You've seen probably a decade's worth of adoption get pulled into the course of 6 months. And when you look at the cloud, when you look at data, that's what everything is about right now. The most valuable asset any company has is its data, but that data is absolutely worthless if you can't analyze it. Because if you can't analyze it, you can't take action, and when you can't take action, you can't make good business decisions that drive profitability.
Yeah, accumulating that data, artificial intelligence, and then disseminating it all in the cloud has been huge. Kathryn, I want to give you the last word. You know, Warren Buffett has done, I mean, listen, obviously he's an amazing investor, but more recently, a lot of folks think that these are the younger guys that he's bringing into his operation more so than him. But does it give these spaces, the cloud computing area, just that little bit of extra cachet?
It does, but let's also remember that Warren Buffett also dabbled in the energy space back in July with purchase in Alerian, and that has underperformed since. Look, I think these are important topics to discuss, but let's also look outside the country. Emerging markets have a very high carry and a lot of return. So if we're looking for return in a low interest rate world, I guarantee the flows are going to be headed that way. So beyond U.S., let's start to look at returns in the emerging space.
All right, let's leave it there. Mark, Phil, Kathryn, fantastic stuff. It was really helpful for the audience, and that's what we want.
Thank you.